Good day guys, welcome to this free video tutorial where I will be sharing with you guys a high probability trading strategy that we will just call the one glance strategy for now. For more information, feel free to visit my website at www.fxautomated.com. First things first, we're just going to go over some assumptions. So I'm going to assume the following. I'm going to assume that you understand the risks involved with trading, that you understand the basics of proper risk management, for instance, the 2% rule. That means that you will never risk more than 2% of your available trading capital on any one trade. I'm also going to assume that you understand the principles of technical analysis and that you understand the fundamentals of trading, in other words, trade management, opening and closing trades, and also knowing, when not to trade. I'm also going to assume you understand the fundamentals of market structure and how the markets work, and that you understand that this is not investment advice or recommendation to enter into any transaction. So if any of these points are unclear to you, I strongly advise you first invest in a comprehensive trading education to better equip you in your trading. And feel free to check out my website at www.fxautomate.com, where I do offer a very comprehensive trading education. So guys, feel free to have a look at my website, and I'll also explain a bit more at the end of this tutorial about my course. At this stage, you might feel this is a sales pitch, but I can assure you what is about to follow is very high quality information of a strategy that has actually been around for many decades. And as we will soon see, the strategy is going to tick a lot of boxes that any trader will find very valuable in their trading arsenal. So what makes a good trading strategy? So firstly, I believe it must be rule-based. That means it must be easy to follow and it must be repeatable. So for you guys that don't know, there was a group of traders called the Turtle Traders. They were basically a sort of social experiment where they were just told to follow rules, and they actually ended up doing pretty well with their trading. You are welcome to go and read up more about the Turtle Traders. Secondly, I believe a good strategy must be robust and reliable. That means it must be able to work in any market, regardless of fundamental reasons and all of that stuff. Also, it must be able to tell us what the current trend is. I'm a strong believer of trend trading. So when we trade, I believe you try your best to trade in the direction of the trade and not against it. A good strategy must also be able to tell you when to trade and when to stay out. That means identifying high probability setups. In other words, knowing when there's good momentum in the market and when to take a trade and when not to take a trade. Also, we want a good trading strategy to tell us when to enter that trade, and that is usually what we refer to as your entry signal. So you'd usually look for a clear rule-based entry signal to follow when entering into a trade. Then you must also, and just as importantly, and sometimes even more importantly, you must know when to exit your trade. In other words, when is a trade turning against you, or when is a good place to take profit. So that would be your exit signal, or when to close your active trade. So the strategy that I'm about to share with you will not only check all of these boxes, but it's also super easy to set up and follow, as I will soon show you guys. So the strategy is called the Ichimoku strategy, and perhaps at this point you guys think, oh no, I've heard about it, but I can guarantee you some of the principles and techniques that I will show you in this strategy you most probably have not heard about before. So you guys are probably familiar, for those of you that might have been trading for a while, of the Ichimoku cloud. So the Ichimoku cloud is also known as Ichimoku Kinko Haya, which is loosely translated from Japanese as one glance equilibrium chart, or at one glance you can have a chart that is in equilibrium. So that is a comprehensive indicator that allows us or its users to quickly, at a glance, ascertain trends, support and resistance, as well as momentum. But what most people actually don't realize is that the chart is actually only one part of the Ichimoku system or strategy. There are other aspects to the strategy, which is referred to as wave theory, that looks at market structure, If any of you guys are familiar with Elliott wave theory, that actually ties in quite nicely with that. There's also a part called price theory, which helps you to identify price targets using those wave structures, and also Ichimoku number theory, which is related to Fibonacci to some extent, but not quite. But that also helps you to understand market timing within those market structures. Starting by looking at the different components of the Ichimoku cloud, that would be the first part of the Ichimoku system that we will look at. Looking at those components, the first part of the first component is called the Tenkan-sen line, and that is calculated by averaging the highest high and the lowest low for the last 9 periods. It's also referred to as the turning line. Then we get the Kijun-sen line. It's calculated by averaging the highest high and the lowest low for the last 26 periods, and that's also called the standard line or baseline. Then we get what we call the Chico span. That's basically just the latest closing price plotted 26 periods back. It's also called the lagging line. Then we get 2 components which collectively form the cloud. The first one is Senko span A. That is calculated by averaging the Tenkan-sen and the Kijun-sen, and then plotted 26 periods into the future, and that forms part of the leading edge. Then we get the Senko span B line, and that is calculated by averaging the highest high and the lowest low for the past 52 periods, and that's also plotted 26 periods into the future and forming also part of the leading edge. So as you guys can see, I have a page number here saying page 16, and here at the top right I have something saying module 10. That's just because I am now borrowing from my course, and this is just one of the sections that I'm covering and one of the strategies that I'm covering. But let's continue. Quickly looking at the different cloud components on a basic chart example here. The light blue line we have over here is what we will call the Tenkan-sen line, and then we have the darker blue line called, as mentioned, the Kijun-sen line, and then we have Senko span A. So in the uptrend, that would be your top line, or usually depending on how your indicator is set up, it would be a green line, and Senko span B, which would be a red line in an uptrend. And yeah, that would be the basic components on a chart. What was also important to mention is that the Ichimoku is actually the Ichimoku cloud is actually indicator available on most trading platforms, so it's ready to apply to most platforms. And just before we almost forgot our Chico span line, which is basically just the current closing price, as you can see in this example, plotted 26 bars or 26 periods back. So that is the Chico span or lagging line. You guys can also see what I meant with the leading edge of a cloud that is plotted 26 periods forward. So there's a piece of this indicator that actually extends into the future 26 periods, and that is the leading edge of the cloud. So just to give you guys a brief idea of how this works. So in an uptrend, so this latter part here is, and let's say for the purposes of this example, the current uptrend, that will mean that your first level of support is the light blue Tenkan-sen line. Your second level of support would be your Kijun-sen line, that is the darker blue line. Then your third level of support would be the top part of the cloud, or Senko span A in this case, and then your fourth level of support would be Senko span B, the red line, and then the last level of support would be using Chico span and having that stay above the red Senko span B line. In a downtrend, we're just reversing the logic here, as you guys can probably understand. So moving on. Let's look at how to read the Ichimoku cloud when looking at it on a chart, and what to look for. So I've identified 4 major points that I usually try to look at to quickly, ascertain, trend direction, as well as, what way to trade, or whichever trading opportunities is presenting itself. So the first thing that we are looking for is, where is price in relation to the cloud? Are we above the cloud? Are we in the cloud, or are we below the cloud? So if we are above the cloud, that would already be a bullish indicator saying we are on an uptrend. If we are in the cloud, and we'll discuss that a bit later, that would mean we are not really in a trend at this stage, and probably more consolidating or ranging, so not really ideal for any trading. And if we are below the cloud, that would mean we are probably starting a downtrend, or already in a downtrend, or just be more bullish overall. The second thing is looking at the leading edge. So that's the part of the cloud that is projected forward, and that will help tell us again whether we are looking at a more bullish trend, a more bearish trend, or whether there are good momentum in the market. So, depending on how steep the angle of this leading edge of the cloud is, will actually help to tell you how much momentum is in the market. So, in this specific example, you guys can see that the leading cloud is pointing rather steeply upwards, meaning there's a lot of momentum in the market. You guys can also see that it is green. That means that Senko span A is above Senko span B. So, that would also be a bullish indication, and giving confirmation of the bullish trend. The third thing that we will be looking at is the Tenkan sign line. That's our light blue line in relation to our Kijun-sen line. That's the darker blue line in this example. If Tenkan-sen is above Kijun-sen, again, that would mean we are trending upwards. Similarly, if it were to be below Kijun-sen, that would mean we are probably in the shorter term in a more downwards trend. So if we looking at this example and just look at the first 3 points, we can see that we are above the cloud, bullish, that we can see that our leading cloud is pointing steeply upwards, and it's green, which is also bullish, and also in the third point here, we can see that the Tenkan-sen is above Kijun-sen line, which is also bullish. Now, the fourth thing to look at is our lagging line, Chico span there, calculated 26 periods back from our closing line. And we want to see that also above price and also above the cloud. And in this example, we can see that it is indeed above, well above the cloud and price. So all of these indications, just by looking, and that's why I refer to the at one glance system, because at one glance I can immediately see we're above the cloud, Tenkan-sen is above Kijun-sen, the leading edge of the cloud is pointing upwards, and our Chico span line is above both the cloud and price. So that's all bullish indications. Okay, so what else do we look out for? As previously mentioned, when we see price, so just going slightly back in time here in this example, when we see price is moving in the cloud, that means that there is some noise, and that means the price is currently just ranging and staying between levels probably, and we also call that the price just being just consolidating. So no point in looking for trades, and we would rather wait for price to break out of the cloud to get some clear direction. So when do we actually enter into a trade using the Ichimoku cloud strategy? So guys, the first thing that we would look for is a clear breakout of price from the cloud. So just sticking to the example we have here, let's just start here at just after this consolidation period. We can see we have a big red candle that breaks below the cloud. So looking at our 4 points, as we mentioned already, we can now immediately see, we can immediately see that we are now below the cloud, and looking at point 2, is the leading edge of the cloud red or green? So looking about 26 periods forward, let's say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, we're around here. So the leading edge of the cloud would be red at this stage. It would also be pointing down slightly, not too much. And at this stage, not really much bearish momentum, but the leading edge of the cloud is red and pointing down. Looking at the third point, where is Tenkan-sen in relation to Kijun-sen? When we see this big break on the candle here, we can see that we do have Tenkan-sen below Kijun-sen, which is also bearish. And then finally, the fourth point is Chikou span above or below the cloud and price. So now we need to project backwards, and we can see over here that is the period where that's where Chikou span found itself at that stage. It is well below price and it is well below the cloud. So that would be 4 out of 4 bearish indicators. So no problem in taking a short trade over here. So guys, at this stage, I'm just looking at this example. That would have been a good short entry. You might perhaps ask where would be a good place to place your stop. And for those guys who do not know what a stop is where you would abandon your trade, or you say exit your trade at this stage were to turn against you. In this specific example, because we have a 4 out of 4 indicators showing we do have a bearish trend going, I would place my stop probably just above this bearish candle over here, preferably above at the Kijun-sen. So usually when we have such a strong bearish in this instance setup, you'd use your Kijun-sen line as your exit. You can even look at using your bottom of the cloud, be that Senko span A or B, but basically using the bottom of the cloud as your exit signal. So just following this through, we can see how price actually moved well down and it stayed well below Tenkan-sen at this stage. Here we can see we had a close above Tenkan-sen, and here we even had a close above Kijun-sen. So as previously mentioned, you could use Kijun-sen as a stop loss, but if you were looking to catch bigger trends, it's usually wiser to use the bottom of the cloud. And also in a strong trend like this, it's also usually a good idea, just because you would expect price to continue downwards, to use a stop level to break even soon, which means you don't really have to worry too much about a break or a close above something like the Kijun-sen line. So I usually look at this. I really look at the Ichimoku indicator installation. I do use RSI divergence in conjunction with Ichimoku, and I'll briefly show you guys how that would work on the chart as a practical example. I also do look at major levels of support and major levels of support and resistance, and that's just because that is what the institutional traders are doing. So also where the smart money will be making their buying decisions. I also look at the big moving averages. So that would be your 100 and 200 moving averages. So all of that is factors that I do take in consideration. But usually you'd see in a sharp or a strong bullish, bearish trend that we have here, if you only have one close above Kijun-sen, that's not usually a concern. If you had a second close above Kijun-sen, that might have started to indicate a pullback. In my experience, I've always, and this ties in with Ichimoku wave theory and market structure in general. For those of you guys not familiar with market structure and waves, the market usually moves in what we call impulse waves. That would be your bigger moves, and then a small correction move, and then a big impulse move. So yeah, it's always good to take market structure into account. So I can clearly see that this would only have been a what we call a correction move, and we only had one close above Kijun-sen before it was rejected. Price was rejected the Kijun-sen line and started moving lower. So in an ideal world, perfect world, we'd obviously like to take profit as low as possible. Unfortunately, in trading, the perfect world does not exist. But luckily, if we look at something like Ichimoku price theory, it does help us to identify these, type of price targets. Also, if we were to look at major level support and resistance, we might have also more easily identified levels of take profit. But just sticking to the Ichimoku system on its own, you can see that we had some big rejection from this level, meaning there was some major support over here. Price went back, closed above Tenkan-sen, stayed well below Kijun-sen for quite some time still. Here we can see we had a small, how can we say, close above Kijun-sen, 1 and 2 closes above Kijun-sen. So generally speaking about the Ichimoku strategy, when we have 2 closes above Kijun-sen, that is usually not a bad time to close your trade. So, yeah, if you didn't use a price target as calculated by Ichimoku Price Theory or a price target based on a major level of support, you would have used that second close above Kijun-sen. Yeah, like I also mentioned with wave theory, yeah, we can go into Elliott wave, the 1, 2, 3, 4, 5, A, B, C moves. There's a lot of things, and if you want to learn more about that, go check out my website or go have a look at my trading course, and you can learn more about all of that. But generally, you'd have at least 2 major impulse moves per, how can we say, per trend. So you'd have like a big, impulse move down, a little correction, and an impulse move. All of that is fractals, so you have little impulse and correction waves within that, and that speaks more to Elliott wave theory. But yeah, not really going to delve into that right now. So that would, for just looking at Ichimoku, that would be a good exit. You can see that we already have a Tenkan-sen Kijun-sen crossover. That usually is not the most reliable, but that could be an early indicator for a trend reversal, meaning we are probably starting to reverse trend, but not necessarily. Never read that signal in isolation. So let's just follow this through, see what happens. We can see price moving up well into a cloud. Big rejection in the cloud. I want you guys to be aware that the thicker the cloud is, the more resistance the cloud will offer. So you can see immediately price gets rejected. We're already back below Tenkan-sen here. And now we have another breakout below the cloud. So, yeah, some people will perhaps look at, how can we say, re-entering a short if they were looking to ride a bigger, nastier downtrend. Yeah, I personally think that if you were to consider something like that, always use, especially if that is going to be your second trade for the downtrend, use something like the Kijun-sen line for your stop loss. So just in case you are wrong, which will happen in trading, rather you be safe than sorry. So if you were to take another short there looking to cash on the bigger down move, rather use something like your your Tenkan-sen line as a stop. So in this instance, if you were to have taken another short, you would soon have realized that you are indeed mistaken, and you would have been stopped out for a very small loss, especially considering you would have made a good profit on that short trade. You can see that we do have price now reversing, really fighting, in the cloud. A lot of, how can we say, volatility here. Price actually just consolidating. We do have a small break here. So as you can see, I pointed out cloud break. Where is sugar span? So the first thing, if you see something like this, you have a breakout from the crowd, because usually that would be a long signal, right? But let's look at our 4 points first. 1, are we above the cloud? Yes, we are above the cloud. 2, where's the leading edge? Looking 26 periods forward, 4, 5, 6, 7, 8, 9, 10, 11. You can see that leading edge would have been around here. The leading edge is green, but it's still pointing down, which means the momentum at that stage is still bearish. So we have a check for 0.1, not really a check for 0.2. Cloud still the leading edge is still very much bearish. 3 is Tenkan-sen above or below Kijun-sen. With that break, we have Tenkan-sen below Kijun-sen. So again, not a very good bullish indicator. And 4, where is Chico span in relation to the cloud and price? To find Chico span, we have to project. If you were to have looked at this indicator in real life, you would have seen Chico span to be around there. And we can see that Chico span is clear of price, so it's above price, but it's way below the cloud. So definitely not bullish at all. So The only bullish signal we have here is the 1, and that is not good enough for the Ichimoku trading strategy. As mentioned, the Ichimoku trading strategy is all about high probability trading, and that would not be a high probability trade. And yeah, soon enough, you can see that price was rejected again, and we had another break to the downside. So for those guys who just trying to get into this big, how can we say, bearish trend that they might be anticipating, if they were to try to go short at this stage, be safe and rather use, Tenkan-sen as your stop loss. Because, yeah, I just actually wanted to have a look at something. Where is Chico Span at this stage? Just projecting all the way back, we can see, Chico Span over here was actually still entangled in price. So you're not really getting a bearish signal from Chico Span with this break over here. Okay, so let's see what happens going on moving forward. So we have price being rejected. So I probably would think it's safe to assume that there is some major level of support or major, how can we say, demand zone happening over here with buyers stepping in. So we can see price reverses and we have another small cloud break, but looking back we can see that Chico Span is still below the cloud, so no signal there. Okay, so here we have another big bullish candle. That is usually a good signal, but let's just first measure it against our Ichimoku trading strategy. 1, are we above the cloud? Yes, we're above the cloud. That's bullish. Leading edge, is the leading edge green, and also how steep is it pointing upwards? So looking at the leading edge at this stage, you'd probably notice that it's just started to turn upwards. So not really pointing up steeply, but it is edge bullish. 3, where is Tenkan-sen in relation to Kijun-sen? We have Tenkan-sen above Kijun-sen, so that is bullish. And 4, where is Chico Span? Is it above or below, or still entangled in price? So looking back, projecting back 26 periods, we can see there we have Chico Span right above the cloud and clear of price. So again, we have 1, 2, 3, 4 checks, and we know that would have been a good point to take a long. For instance, I would have used, if I were to go long here, I would use Kijun-sen as my stop loss. And we can actually see that the trend actually started to pick up quite nicely, and we have price respecting Tenkan-sen. And as we start moving up, you can start moving I think actually a good practice would be to wait for Kijun-sen line to catch up to your entry level, and then as soon as Kijun-sen moves just to or just above your in a long position above your entry level, you can place your stop level below it. That will guarantee a no risk trade going on. So we can see where this example actually ended. Price was still respecting Tenkan-sen, meaning the trend was probably continuing onwards, and we had no clear exit signals. Be that levels of support, resistance, or using Ichimoku price theory to calculate targets. But something I want to show you guys that I've noticed, and you won't really see this in any other literature, this is just something I've picked up from experience, is whenever you see a cross, in other words, we call it a Kumo cross, or Kumo cloud cross. That is something that usually tends to draw, I say draw, but you usually see price will correct when you have a cross above or below you. So over there we had a cross, and you can see actually how we got that correction. And I think again, here we actually broke out of the cloud in a cross. It's also worth noting, as mentioned earlier, that the thicker the cloud, the greater the level of how can you say, resistance or support it's going to offer, and price will usually try to break through the thinnest level of the cloud. But just looking above this little cross there, you can see we had a minor correction, and there again we have not a big cross, but the two clouds touching each other there. and you can see that we did have a small correction moving towards that. So just something to be aware of. I'd actually like to jump to some examples in the chart. I'll just briefly perhaps show you guys. This does form part of my course, and I do explain this in much detail, and also give you guys some examples practically on a chart how to use Ichimoku price theory to help you calculate price targets. And then I also look at Ichimoku number theory. You guys are obviously welcome to go and pause the slides and have a look at that, but if you want more information about these extensions to the Ichimoku theory, I suggest checking out our website. Okay guys, let's have a look at some practical examples. Okay guys, so sorry, I just want to close my okay, I think this is probably fine. So as you guys can see here, I'm using a charting platform called tradingview.com. Some of you guys might already be familiar with it. If not, I do personally find this to be the best free trading platform out there. I do use some how can we say, proprietary trading or charting platforms as well. But for those of you looking for a very functional very functional, reliable charting platform, tradingview.com offers an excellent charting platform in my opinion. Okay guys, so I just have the EURUSD open here, and you guys can see that I have the Ichimoku Cloud open here, as well as some other indicators, but for your sakes, I'm just going to close, remove all indicators, and remove everything from the chart, so to give you guys a perfect or a better idea at least of how to set up your chart. Okay guys, so your the instrument or market that you are looking to trade, you will use the search bar over here. We currently have the EURUSD, but you can use the GBP USD, and whichever just write that quickly, GBP USD for instance, and you'll see it will give you the different instruments and markets. So let's just go back to the EURUSD. The USD, very popular market to trade. I usually start at, and this all ties in with my personal trading platform, also something I discuss in greater detail near the end of my course, but it's very important to identify your major levels of support and resistance, especially the major levels of support right above you and below you. So how we do this is by going to a higher time frame. So you can go to a monthly time frame, that's also okay. So, and I'm just going to use a horizontal line just to quickly draw in some major levels of support and resistance. Remember guys, there's no such thing as a support or resistance line. It's usually more a, how can we say, a zone. So for instance, if I were to use this little rectangular section, we can see that would be a zone rather than a line. But just for the purposes of this demonstration, I'm going to use a line. So I'm just going to, I'm on a monthly time frame, so take that into consideration. So you can see there's a level, and I think I can probably say there's a level as well. And I'm basing these major levels of support and resistance based on the rejection and just the way price action is reacting around these levels. To understand more about price action, you are welcome again to check out my website, have a look at my course. I do go over price action and major levels of support and resistance in great detail. So just for now, I think that's good enough. Let's just go down, we go to a weekly, maybe just fine tune these levels. I think we can actually see that there's another level on over there. And let's keep that. Okay, let's go to our daily level now, our daily time frame. Apologies. Okay, I think that's fair enough. So what we have done here now is at least we've identified the major levels of support and resistance. Okay, so guys, I actually want to make it even simpler for you. I'm gonna change the color of these lines so you guys can see that, and this is live. I don't believe in cherry picking. I'm gonna use a live chart, do it to the best of my ability. That would at this stage be a level of resistance, so let's just make it red, and that would be a level of support. I'm gonna make that green, and yeah, this I'm just gonna keep that pink for now, because you can see that it did act as resistance at this point. We had a breakout, but price soon moved back in, and now it's starting to get rejected. So probably at this stage it would be fair to assume that would be some resistance still, with price being below it. Okay, but now for the moment of truth. So we are looking for the Ichimoku indicator. Most charting platforms will have the Ichimoku indicator readily available or preloaded or as built-in. TradingView also has it as built-in. So if you can look under the menu item here called built-in, or you can just type in Ichimoku. There we go, Ichimoku Cloud. And there it loads the Ichimoku Cloud. What I want to do is I'm just going to customize the Ichimoku Cloud slightly so that it's a bit clearer to read, and just keeping with our, keeping with our examples in the slides, I'm going to change the colors of Chico Span to dark blue, and Chico Span of Kitchen Sen to dark blue, Tenkan Sen to light blue, and the lagging span or lagging line or Chico Span, I'm going to change that to like a goldish color. Okay, here we go. And then, yeah, that will just be our clouds. I'm going to be happy with that. There we go. That would be your Ichimoku indicator all set up and ready to go on your chart. Okay, guys, now there's one more thing, well, two more things that I actually like to tell you guys. And since we're on a real life example, and as I've mentioned, I do not trade Ichimoku in isolation. I do believe it's always wise to look at confluence of major levels of support and resistance, and also taking into account what we call moving averages. I'm pretty sure everybody is aware of moving averages. So what I'm going to do is, so this is the free version of TradingView that I'm using to just give you guys an example. The free version of TradingView only allows free indicators. So if I were to add two more moving averages on here, I would immediately, reach my limit on the amount of indicators I have on here. So what I'm going to do is just to circumvent that, I'm going to type in moving average. I think they call it how can you say multi-moving average. So that's where I find it. It's going to allow me to add multiple moving averages as part of one indicator. Multi-moving averages. Let's try that one. I think that'd probably be fine. Okay, that's probably going to work. So I'm just going to use 100 and 200. That is the basic moving averages. So 100 and 200. I'm just going to disable all the other ones. Don't want to. Let's make the 100 purple, and we make the 200 red. Make that bigger lines. Okay. Like that. There we go. Okay, there we have it. So now what you guys will see is we have our, why do I feel I'm missing a line here? 100, 200. I'm missing my 200 moving average. Where is it? Sorry guys, I just want to get my 200 moving average on here. I do believe this indicator might be a bit whack, so I'm just going to use a different one. Apologies for wasting your time. Multi-moving. Let's use that one. And like I said, guys, I just want two moving averages. That would be your 100 and your 200 moving averages. I have no need for any other ones at this stage. So let's make the 101 purple, the other one red. There we go. Okay, and I'll explain to you guys why I find that important. And then I'm also going to add one more indicator, which you guys should also be familiar with if you are not. Again, I cover all indicators in my course in a lot of detail, as well as with practical examples. It's called the RSI, that is the relative strength index. I'm just going to configure that also in a way that I like to use it. I'm not going to go into too much detail on how these indicators work and all of that, but I'm going to change it the RSI period to 2. Okay. So I primarily use it when used in conjunction with Ichimoku as a divergence indicator. So guys, yeah, perhaps just looking at the live example, let's look at our 4 points. So looking at Ichimoku at one glance, what do we see? We can see immediately that we are above the cloud. So technically bullish, but then we look at our leading edge and we can see the leading edge is actually red, and it's also not pointing up, it's just pointing sideways. So that's not a bullish indicator at all. We can also see that we have Tenkan-sen below Kijun-sen, which is bearish, and we can also see that we have Kijun-sen in the cloud, meaning no clear direction. We can also see just by looking at your 200 moving average as well as your 100 moving average that both pointing down. We have 100 below. So this is not a bullish setup, even though we do have price above the cloud. This is not a bullish setup. So guys, perhaps just before I go and try and explain to you how we would have traded, well, actually, let's do that. Why not? Let's just go to the last proper trend that I can identify here. It's probably over here. Remember, guys, I'm looking at a daily at this stage. You can, at any stage, change the time frame. So immediately you can see now I'm on a 4-hour time frame. Picture looks a bit different. We still have our levels. But yeah, let's just quickly go through our 4-point analysis for Ichimoku. We can see we're above the cloud, so that would be bullish. Secondly, where is the cloud pointing, and also which color? It's green. It is pointing upwards. But then if we look at the greater, how can we say, the greater cloud, it's still pointing down. But yeah, let's just look at Tenkan-sen to Kijun-sen. Tenkan-sen is above Kijun-sen, so that is bullish. But where is Kijun-sen? Kijun-sen is, in the cloud at this stage. So, yeah, not bullish. So at this stage, there was some bullish momentum. I think at this stage, looking at that big green bullish candle, I think that could have been, just trying to see, yeah, that could have been a bullish, a long signal, guys. So if you were to follow the Ichimoku system on a 4-hour time frame and not really considering the what we call the major levels of resistance, which would have been the case at this stage, you would have probably taken that for a long entry. And you guys know the rule: if the cloud is still pointing kind of sideways, always use your Tenkan-sen line as a bailing point or exit point. So yeah, if you were to take a long there, I would have exited over there. But as mentioned, I do also look at what we call RSI divergence. So if I see that price is making a new high, so we can see that we have higher highs and higher lows, But specifically looking at closing prices and what we call fractals or swing points, we can see that we have a lot of higher highs happening there, but if you look on the RSI, we have lower highs. And I don't want to go into detail about RSI divergence. You guys can go read up on that. You can have a look at my website or look at my course, and I'll explain more about that. But that is not a bullish signal. I have bearish divergence over here, and that is because we have higher highs on price and lower highs on the RSI. So I would have not had taken that as a long trade. So perhaps just going back to our daily example. Yeah, guys, and I've not cherry picked this at all. As you guys can see, I'm just using a live chart using the USD common market, and we will have to look at some other markets now, just to train you guys on how to think when applying the Ichimoku strategy. So we can, just looking in hindsight, you guys can see that we had a very nice downtrend happening over here. And I'd like to show you guys how you could have potentially, having followed the Ichimoku rules, identified this as a possible shorting opportunity. Okay, so here we can see that we were in the cloud. That means it's noise consolidating. Then we had a cloud break there. We still had Chico span in a cloud, so that would not have been a signal. Only over here we have Chico span below the cloud. So that would have been our first, how can we say, valid short entry signal. And the reason I say that is we are below the cloud, which is point 1. And point 2, we can see that we have the leading edge of the cloud red. It's pointing sideways, so not a lot of momentum, which means already I would have used Tenkan-sen as a stop loss level just to be safe. And then we can see that thirdly, we do have Tenkan-sen below Kijun-sen, which is bearish. Which is good in this instance, and we do have Chico span below the cloud. So that would have been a valid short signal with a stop loss above. When I say a stop loss, you can use a fixed stop loss around there, which is just above Tenkan-sen on your entry bar, or you can use a dynamic stop loss, which means you're waiting you take a close above Tenkan-sen line as an exit. So let's say we did use the case of a close above Tenkan-sen as an exit. So we would go short over here and stay short. As you guys can see, we have Tenkan-sen line over here. We have price coming really close to closing above Tenkan-sen line, which we could take as a possible exit signal. But it never closed above Tenkan-sen, so that would have remained a short. And just briefly, guys, touching on the RSI divergence again, you get two types of divergence, which are regular divergence and hidden divergence. I can immediately also see that I have higher highs on my RSI and lower highs on my my price on a micro time scale. That's why I'm using the RSI2, which would have given hidden bearish divergence or a continuation signal. So that wouldn't have concerned me at all, and I would have stayed short. Here we can see we actually, even over here, we can be hitting what we call major support. So if I would have seen a turn here, I would have taken an exit on a close above Tenkan-sen, but we do not see a close above Tenkan-sen. Here we hit support again, as you guys can see. And this is the support that we draw in from the higher time frames. So that could have even been a target. If you used Ichimoku price theory, you would have calculated your target probably to around here as well, just by eyeing it. But let's say we hit support and we are willing to stay in this trend. But if you hit something like major support, I would take a close above Tenkan-sen as an exit signal. So that would have been a very proper trade in my opinion. I think you would have entered your trade over there and you would have exited over there. Proper trade in my opinion. I mean, you can just go and have a look at the number of pips that could have given you using the measuring tool. You could have, where is it? There we go. Let's just quickly see. That would have been, where is that? Close above things over there. Yeah, that's a lot of pips. That's really a lot of pips. It's a very good trade. I believe that is 420 pips. Or was it 4,000? Anyway, guys, that's a great trade. Let's just have a look at some other markets. Okay, let's just have a look at GBP/USD. That's the other popular market. It's similar to Euro USD. You guys can see it's drawn full of support and resistance lines, just because I've obviously traded this market in the past. But I'm just going to leave the support and resistance lines in here for now. As we already covered how we draw them, we start on a higher time frame, be that monthly or weekly, and then you start just drawing in those support and resistance line based on how can we say, price action. I personally prefer the 4-hour time frame when I trade. It's just a nice time frame, giving you some time to not time, and not having to force you to sit in front of your PC every waking hour. Let's just take this example on the GBP/USD, going back to where this trend actually started. That would have been over here. So here you guys can see that the market is consolidating, staying within the range, moving in and out of the cloud, not really going anywhere. We have a couple of breaks I can see above the cloud, but if you were to project this forward, you'd see that your leading edge of the cloud was just pointing straight sideways. So no momentum in the market at all. I think over here, probably, over here we can see that we're picking up some momentum. So just measuring 26 periods from over here forward, just to see where the leading edge would have been over here. So your leading edge would have been here. So you can see that the leading edge is thickening up, it's pointing up. And I think if you look at your Chico span, you can see it's also above price at this stage. So that might have been a good place to take a long. It's really not a lot of momentum in the market over here, and it's important to understand, looking at market structure, that price usually tend to move from one level to another major level. So I personally would have probably waited a bit just for the market to move out of this consolidation mode, or ranging phase, and just get out of this. And whenever you see something like that, that is actually in an uptrend a very bullish signal. That is what we call a pin bar reversal, and you can see prices are very, very strongly rejected from the cloud upwards. And right after that, you can actually go back and you can measure and see, okay, we are above the cloud. We have Chico span above price in the cloud. We have Kijun Sen and Tenkan Sen at this stage. They're about touching, but you still have Tenkan Sen above Kijun Sen. You could have used that as a long entry, and because the cloud is rather thick and also pointing upwards, you can use your Kijun Sen line, darker blue line, as your stop level. And you can see price moved up. We did come down, and you guys can also see, sorry, I just want to show you guys that we have a crossover of the 100 moving average across the 200 moving average. And you oftentimes, as I mentioned, with the crossovers of the cloud, you'd see that price tends to move towards those crosses. And that actually ties in to market manipulation. I have a video on that as well, how retail traders actually use these crossovers to signal, so that they would see that signal of the 100 moving over the 200, and they'd try to go long, and then the market comes back and try to stop them out. So that's actually why these pullbacks and corrections occur. But I think that would have been a good long, and you can see that price stays well above your Kijun Sen line, even there just touching it, but not closing below it, and then continuing onwards. Over here, we do have a close below Kijun Sen. It's actually quite interesting because we have a cross as well of Tenkan Sen and Kijun Sen. But with the moving average both pointing upwards now, and we well above this level, this major level, which initially were support and it got well rejected, that's probably just what we can call a retest of that level. And you can see price just continues on, respects the Tenkan-sen line, respects the Tenkan-sen line. Here we can see that we are starting to lose some momentum. If you open your RSI indicator, where's my RSI indicator? Why did it disappear? If I can find my RSI indicator, let's see where it is. Now I have to edit relative strength index. I'm just gonna add that again. Make it 2 again, 2 period RSI. Not going to fiddle with that too much now. You'll probably see that we will have some divergence, if I'm not mistaken, as we start to lose momentum here. So what I'm picking up, just quickly see. Yeah, okay, to be honest, guys, I don't really see any divergence at this stage. So yeah, not too much to concern me for this long position. We do have a close below Kitchenson here over here, but that's why I say it's important to take into account your major levels. We're well above the major level here. Your trade would have been in profit at this stage. So as long as we stay above this major level of support, well, this level of resistance turn support now, we're still good to go. Let's just see. Just looking for some divergence here, guys. Yeah, it's not very clear. Slight that's actually some continuation divergence. You can see you have a higher low on the RSI over here, and then your lows being equal. So that's slight continuation. I'd be careful here, guys. My stop loss would probably be just below this level over here now. So yeah, this is a live example, so we'll have to see where this actually goes. But at this stage, just looking at the 4 hour, we're still bullish. Momentum is drying up a bit, but I don't really see any divergence. So you can also look at the what we call the money flow index, the MFI. That's another tool I use to look for divergence. Not going into detail now and how to read it, but that's also something I do use for divergence signals, trying to find out where the market. Yeah, so we do have some divergence on the MFI. You can see that we are making a lower high over there and making a higher high over here. So the top's not aligning, meaning there is some bearish divergence. So perhaps not a bad point to just take a break, take your profit, and wait for some continuation of price. Let's have a look at something like crude oil, some commodities. Crude oil. Okay, guys, so here we have crude oil. Let's just quickly draw our major levels of support and resistance again. Oh, okay, so I actually already did draw them, so that's nice. Just going to move back to our 4 hour time period. 4 hour time period, looking at this chart, I can immediately see that we are in the cloud, so just ranging. The trend is up, we're above the 200 moving average. Let's just look at a bit larger time frame, get a bigger picture, bird's eye view. Okay, always good to have a bigger picture. Here we can see we had a lovely trend down. We can see that we had a break below the cloud over there. Leading edge was still pointing up, so I would have used Tenkan-sen as a stop. But yeah, your stop would not have been hit, so that actually would have been a nice trade. But just looking at what we are currently facing on Ichimoku, we have a cloud over here, so that is offering a lot of resistance. For those of you guys who have a background in technical analysis and classical charting patterns, there is something that resembles inverted head and shoulders. Not necessarily something I would be concerned of too much at this stage, as this is actually usually a trap for retail traders, because they would all be looking for long, and then price just continues down. We can see that we do have Tenkan-sen above Kijun-sen, But yeah, we are in the cloud, so there would no trading decision would be made at this stage. Guys, I think this video is actually getting rather long at this stage, and I think you guys should have a very clear understanding of how to implement the Ichimoku trading strategy. As always, you are most welcome to email me or visit my website. My email address is on my website, but it's info@afxautomate.com. If you guys want to learn more, find out more, go to my website. You guys will probably be greeted by a pop-up, and that will introduce you to my Udemy course that I'm offering at a 95% discount. I believe, depending on where you guys are, what your local currency is, it's $10 or even less, in certain local currencies. The voucher code is called FXI Special. So when you want to redeem it, if you click there, you would be redirected to Udemy. You would see the course on a discount. It's called the Ultimate and Complete Course on Hyperbolic Trading, which is, I believe, the only course on derivatives trading that you will ever need. You can go have a look at my course content. You can go and expand, all of these sections and see what it entails. I believe this is the most comprehensive trading course out there, at least that I've seen. It's 7.5 hours of high quality on-demand video. You are backed by a 30-day money-back guarantee, so you really have nothing to lose, guys. So yeah, please go check it out. Email me. Let's chat. Let's see where this goes, guys. Hope you enjoyed it, and happy trading.